Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, the election certainly generated some volatility as we thought it would. Most people thought it might decline. We saw just a crazy onslaught to the upside today as the S&P was up 2.2%, NASDAQ up 3.9%, and the Russell only up 0.1 as it lagged substantially. Yesterday's narrative behind the markets were very confusing since the presidential race has not been officially called yet, and there's going to be lawsuits, and this is likely to go on for weeks. But we expected it was going to be that way. So as we go into today, we're seeing futures strong overnight again, up almost 1%. Pushing up toward yesterday's high. As I discussed in yesterday's live stream, there was a multiple RXT sell signals on a lot of the FANG stocks, the indices. It was across the board. Now we're seeing this strength overnight. What I've seen in the past, after an RXT sell, there will be a spike early on, and then the market will close lower on the session. I'll go through all these details here in a few minutes in the technicals. But as we go forward this week, we're coming into Thursday morning, and this is the big morning that we always look to, and maybe we can get back on to business as usual. There's hundreds of earnings reports coming out, but the focus will be on the claims numbers and the continuing claims. Now, claims are expected to show 750,000 increase. Last time we saw the continuing claims come in at 7.7 million. I think we're going to come in below 7 million today, and if we do, that could be bullish and certainly add some support into the market. The question that I really am trying to ask myself tonight, was yesterday really overdone, and what was that reaction about? If the argument is about stimulus, then that's fine, but stimulus doesn't make the economy. We need the economy to come back online, and there's been so many businesses destroyed this year that it's going to be hard to really get back to where we were before the COVID situation came into play. So I don't think it's about stimulus. There's a lot of mixed numbers that are out there. We saw healthcare move up 4.5%, which was somewhat interesting because if Biden does win, they're talking about Medicare for everyone. So how are the healthcare companies actually going to benefit from that? Maybe there's some benefit there of being the administrators, but it's interesting to see some of the reaction that we saw. I also talked about in yesterday's live stream about how a lot of the so-called stimulus trades weren't really working. The airlines were all under pressure and continued to drift lower in their technical patterns. It doesn't seem to be any recovery in sight. So I'm wondering where the stimulus is supposed to be going, other than maybe another PPP round or something of that sort. But I just don't see that being the bullish fact that we're going to enter into a new bull market. If the markets are being bid up because of stimulus, then that will be short-lived, and then this rally will fade. As you know, I've been discussing that I believe we're in a very broad trading range. After printing the highs at 35.89 and the September lows, I now believe we're going to remain in that range for some time. I'll also unpack this in the technical section here in a few minutes. But make no mistake, we're not going to be going into a new bull market. Now, we might be able to move back toward 3,500. We weren't far from there today. We printed 34.80. So we'll have to see how things play out. But I do expect to see the next couple of days, see some backfilling of the rally that we saw yesterday. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As we begin with the WaveTech database review, we did see a substantial amount of buy orders come in on the short-term database. We saw about 1,500 new buy signals versus about 300 sell signals, giving us a bullish ratio. Also, we saw the percent bullish tick up to 25.12%, so it's above that 22% number that I mentioned yesterday. The next level is 28, and then there's nothing until we get to a 42% long. If you recall, we go back over a month ago, we did print up to about 36% bullish, and then it backed off, went down to 12%. And I also mentioned just a few days ago, it was not going to make a new low on the database from the percent bullish standpoint. It got down to around 8.3% back in September when the lows were being rendered then. This time we saw roughly about 12.5%. We're back up to 25. These aren't real big numbers, but we are seeing some traction come into the markets, which is an encouraging sign, but it's more of that sideways choppy pattern that I keep talking about. Other occurrence yesterday was there are three sectors that came back into play again. We saw consumer cyclical, financial, and technology. The WaveTech Financial Index was up 0.97, technology up 0.79, and consumer cyclical up just 0.25%. This is part of that positive rotation that happens, but it's not material as of yet. We will need the database to get above 42% bullish to signal a sustainable rally. As I begin the review of the S&P 500 futures, we have traded up to 34.75. Yesterday's high was 34.80. The possibilities are for the market to move toward the R2 level, which is 34.89. Above that's 35.17. I think that's getting way overdone. We could press it higher. As you'll see in a minute when I go through the NASDAQ is up about 1.75% again overnight. There's a lot of strength in the tech sector once again. And S1 is the likely downside, which would be a 34.09 low. So far overnight, we've had a 34.28 low with a 34.75 high. So we could see a new low on the session as we come into the day session, moving down to the 34.09 level. When we go and look at the weekly charts, this is what I discussed in the live stream yesterday. As I take a look at the weekly futures, we are trading well above the RXT number. That number is 34.06. So as we come into Friday, we're going to watch that number. A close over 34.06 will signal 1 to 2 weeks of sideways to down movement in this pattern. The thing to pay attention to is that PPM1 is not getting a lot of acceleration. It's actually still negative. So this will act as a factor to pull that market back toward that 10-period moving average at 33.79. The major support will continue to be at the 33.01 on the weekly charts, as the PPM2 is actually up 0.66. I thought we could possibly see a move toward the 33.73 level, which is R3, but we've exceeded that number now and went through the extreme all the way to 34.80. As we go to the S&P cash, the cash did give an RXT signal. The RXT number yesterday was 34.27. The high was 34.86 and closed at the 34.43.44 level. So this is well above the RXT number. And it looks like we're going to open higher if the futures continue this strength as we come into the opening. Then we'll see a higher opening. So like in the futures, the S&P cash is likely to go to at least an R2 number and a possibility of going to R3, which would be 34.74 to an extreme of 34.90. I would look for a reversal off of these levels if we get up there. This will also represent the 5th day in this pattern. So typically, even if we are beginning a new upward pattern, what we're likely to see is a five bars up and then 3 down. And we're most likely going to move back toward the moving averages in the pattern here, which are back toward the minimum of 34.20 and possibility of going to around 34.82. There's some other Fibonacci numbers here that are in play, which is 50% would be 34.60 based off of yesterday's high. That number will change if we are able to render a new high today. But the pattern that we're seeing here suggests that we're likely to trade back into these numbers, which will also fall into this Fibonacci grid. As we begin the review of the weekly SPX, RXT for the week was 3404.47. We traded as high yesterday as 3486. We closed at 3443.44. So this sharp rally yesterday just blew up all the metrics that we're used to seeing the markets trade within. Last week we saw a blowout on the bottom, printing down below the 21 period moving average. Now we've seen just a complete reversal as the markets continue to be very erratic around this election. We easily could see another reversal of the reverse, the way that this thing is trading, especially looking at the configuration here, which are the PPM1 is not getting any traction. It's still negative. It's down 0.19, which suggests that we will move back toward the 10-week moving average, 33.87. That's likely to unfold over the next 3 to 5 sessions. As I mentioned in reviewing the daily, today will be the 5th bar up, or the 5th bar in the pattern. So if we are able to render a slightly new high over 34.86, then that would suggest we complete that pattern and start a minimum of a 3-day pattern down, which should set us into the moving averages that I discussed on the daily. The big story that is brewing overnight is the NASDAQ is up 2% right now, trading at 11,997. The all-time high on the NASDAQ was 12,452. It's starting to feel like we could challenge those highs right now. And looking at the daily PPMs, we are seeing PPM1 on the NASDAQ move up to 0.31, which is trend mode, which suggests that the support is quite a bit below this market. We've actually stretched out too far away from the moving averages, so we're likely to see this thing pull back. And as I also mentioned in the opening comments, a lot of times after an RTXL, you'll see a spike up. I've even seen it go to the RXT the next day and then close on the bottom end of the range and then have a 1 to 2 more days of sideways action. But right now this thing is very robust, and just as I'm doing this video, we're up 2.10. We're trading above 12,000. So R3 is 12,060. So there's a bit of a buying panic going on, which is somewhat interesting. So I don't know if there's any news out that started to move the market. Just about 20 minutes ago, the S&P started to surge, and the NASDAQ appears to be leading the way up. So far we've seen a high overnight now is 12,012, and R3 is 12,060. So it's going to be interesting to see if we can hold these prices. So we're basically seeing this thing surge, following through from yesterday's rally that we saw, moving up in toward the R3 target. Just like in the S&P, the RXT for this week is 11,630. We've exceeded that substantially. The high now is 12,017. So as I'm doing this video, we're seeing the prices continue to surge, and the pattern that's setting up here, though, suggests that we are seeing the PPMs all turn up at the same time. PPM1 is flat, so there's no real trend being indicated there. Going back to Monday's video, is that the 21 period moving average had a substantial amount of upward pressure, which suggests that we could see a low there. I thought we would hold that level, but I didn't think, and I thought we could possibly trade to the R3 level, just like in the S&P weekly, but we've obviously exceeded all of these numbers. The grid has been blowing up, the volatility is blowing up, so this is just telling us that we're going to see a continuing high volatility range. The algorithms are fully involved here. Everything is turned on, and that's why we're seeing this type of action overnight. But this is definitely a big surge going on in the NASDAQ overnight, which would add up to almost a 6% move since yesterday's open, which is substantial. I think we're getting things way overdone. Expectations for today is for it to top out around the R3 number, 12,060, We should see some backfilling on this as we come into the U.S. Open, and I suspect we'll see some selling coming in during the U.S. session. The next market I'll cover is the U.S. dollar. We witnessed a crazy volatility day in the dollar yesterday as we traded as high as 94.30 and a low of 93.09, and we finished toward the lower end of the range, basically unchanged, but there was a huge surge and then everything got reversed. A lot of that had to do with the drastic move that occurred in the treasuries yesterday. But we're right back into the moving averages. The 10, 21, and 40 moving averages are virtually the same value. 10 is 93.44, 93.36, and 93.51, and the last price 93.37. We're trading right at the 21 period moving average. S1 today is 93.24. We could print down as far as 93.03, but it looks like what we're going to print so far is an R1 S1 level. I think we'll stabilize here a little bit. If we do see more downside on the dollar today, it should bottom at S2. The final market that I'll cover tonight is gold. Gold is moving back up toward that upper end of the range that I've been discussing over the last couple of days to the 1912 level. We're trading right there at 1912. The high's been 1914.80. We are starting to see these PPMs turn up. So this is a very interesting point on these charts. It looks like gold wants to potentially start to move higher. There's still some major resistance numbers out there on the weekly chart, but we could see a move up towards the 1930 to as high as 1940. The low that we saw at 1863 last week looks to be the bottom of this pattern, and we're looking to move higher. If we can close above the 1917 level today, that will be enough to set the market to move to the next level. Let's take a look at the weekly chart. Weekly chart 1914 is the 10-week moving average. PPM1 is down 0.33, telling us there's only a 40% probability for the market to close above that level. But I believe the dominant value here is the 21-week moving average. That's 1906. I've been talking about this over the past several sessions, that we're going to hang around that 1906 level, probably stay below 1914. A close above 1917 will set the tone for a move toward the 1939 to 1942 level. I don't see us getting above that 1968 level, which would be a 50% retracement of the decline that we've seen over the last couple months. But if we did get above that level, for it to sustain, we're going to have to see PPM1 at least get above its first derivative. So it looks to me that we could move higher, move toward the 0.382 level at 1939 to 1942, and then see some further consolidation before the market's set to move higher. But the daily charts are definitely setting the rotation up that gold is ready to start to move higher in this pattern. This will complete the video. Thanks for watching. We'll talk to you tomorrow night.